Something a little bit different today, boys and girls. We're going to talk about reserve rights token, but in the form of accumulation. A very, very good tactic that I use all the time to accumulate coins without spending loads of money. So hi everyone, welcome to the channel. If you are new, subscribe, bell button, like and comment. Thank you for the overall support of the channel over the last few weeks. It's really gone bang, it's properly moved. So please obviously share, like, and yeah, it helps a lot. We're going to talk about reserve rights, not so much what it is because there's other videos, links, you know, you can check those out. But this is like why I like cryptocurrency, because you can accumulate without realistically using leverage and limited risk. And we're going to talk about some parameters around that. These are always good with the, you know, the high supply coins because you get more tokens for your buck, essentially. Obviously, if you've done your good fundamental research, you'll know that a coin is either good or bad. I rate this a lot. I think it's very, very good in terms of what it is, backers, use case, team, etc, etc, etc. That's why I want as much as I can. I'm going to talk about it. So, like I say, there's a link up here in terms of how it works. You know, you can watch the promo videos, how it kind of works against hyperinflation, and why I think long term it's got a real good, solid option for a good amount of gains, in my honest opinion. But we need to talk about the charts and analysis and risk management most importantly. Now, thus being said, it looks like shit at the minute. It does, right? It's coming down, it's lowering, it's lowering, lowering. I did a video not too long ago saying that buy at these levels, buy at this level, buy at this level, buy at this level. And people are like, what? You just don't know how low they're going to go. It doesn't mean that it's a failed project. It's just life cycles of an altcoin. Hype, boom, yay, yay, die, die. Oh, back to life again, boom. There's many use cases to tell you that it doesn't matter what happens in terms of the altcoin market, in terms of cycles. You could have the best coin in the world, but it may not get the sun for a while because other things are taking that sun away from it. You know, look at other elements of this. Look at Chainlink, how successful it was over the period of the last 2 years versus everything else. You know, what's it doing now? Not a lot. What are other coins doing right now? Pumping like crazy. It's just one of those things, right? Now, let's talk about risk management first as a strategy option. We are going to be using a small amount of your bag to accumulate a token. This could be used on any token of your choice, by the way, if you like it. And you're going to be happy with what is on the exchanges and what you've got in cold storage for the long term. Because if you get it wrong, it doesn't matter. The chances of you getting it wrong is probably slim anyways, because you just catch the next part of it. But what the plan is here is using a very simple trend analysis kind of strategy to allow you to accumulate tokens. Simple as that. So what I always say is buy a bag, keep a bag. What I mean by that is keep a bag on the exchange, like a small amount. If you are, even if it's 20%, right? If you say put $1,000 into RSR, for example, keep 20% of that on the exchanges and play with it. What I mean by play with it is strategically using the high time frames, using the trends and the options available. And I'm going to go through those options and I'm going to show you a few little things. There's two ways you can do this. You can do this a hard way, the more volatile way, and you got to be on the ball a bit more, or the more relaxed way. We'll go through two. And I'll show you what the maths is involved in this to make money. And if you, I don't know how long you've been on the channel, but I did a one about this on Cardano not too long ago. I started off with 7,000 Cardano. It was about a $400 investment at the time. It went all the way up to 26,000 Cardano. And you can imagine the price rise accumulation with that. I'm now staking that nice and chilled out. Took a bit of profits as well, moved it around. I only spent literally $400 on that bag. Pretty damn good. Overall though, let's talk about it. So we've got the trend here. We know what's happening right now. This is a top, big low, lower high, potential lower lows come in my opinion. We are going to use basically the moving averages to kind of govern whether we are in or not. There's multiple different ways you can do this in terms of, you know, simple lines of personal preference, whether you want to do it longer or shorter. But what I recommend is use the higher time frames only. Don't go to the short time frames. Don't panic. You know, this is why you're only using a small percentage. If it goes to the moon, it's fine because you've still got a bag, haven't you? Cool. If it doesn't, you're going to be hopefully be out of position and looking to accumulate coins. Do not worry on this strategy about USD value. you are only worrying about the coin. So let's just say, for example, we'll do a nice round number to keep things really simple, right? And I know the token metrics are pretty crazy with RSR. And let's just look at, say, you know, any drop, right? So let's just say you took your position out on this level here, where you're thinking actually EMA crossed over, is looking pretty bearish, starting to turn around, you know, happy days, right? If you say you've got like 100,000 RSR here, and the simple lines of, you know, it drops in price, and you actually eventually decide to jump back in around this point where it starts to cross over and goes into a bit of an uptrend, you've made a huge gain regardless anyways. And what the gain of that would be is actually roughly about 50, we'll say 50% as average. Now, obviously, you've got to be patient, and it is quite, it looks easy, but it's actually quite hard as well, because you've got to be patient. You've got to trust those EMAs. That is all you're trusting. You've got to trust levels of resistance and support and the moving averages. Is this still in a downtrend? That's all you need to look at. Is it in a downtrend? If it is, okay, cool, happy days. If you are adding 50% on top of that 100,000, you just made up 50,000 extra tokens. Now, the beautiful thing with that is, because you've sold into Tether up here, you've still got that Tether. That is a stable currency, that's fine. Boom, drops, rebuy back in. Now, that is where it gets, that's the easy part of it. When at the top, you sell, you rebuy back low, cool, you want the tokens. Where it gets a bit harder and where it gets more interesting is obviously the other way around. It crossed over to the upside. This is now flipped into a support level. You can then ride it until it crosses over again. Sometimes consolidation periods, it may drop off. You may lose a little bit of token at this point, which is why you always leave a bag on the exchanges, just in case, off the exchanges, sorry. So just in case it moons and you're not in it. You know, as an example, you don't want to run away from it. But again, you can always just jump back in, take a little bit of a loss if that happens, and then start the process again. But let's just say, for example, this does happen. You know, you're a bit, if you zoom in enough, you can see it. Obviously, EMA crossover, it pulls back. Oh, God, damn. You know, and obviously it moves up, right? But with this period here, the lower you go with these coins as well, which is why it's good, the bigger these gains are. Now, I'm going to probably scare you a little bit here. Look at this as a move, right? I know it's hypothetical. We've not played it. But the lower you go in price, the more the gains are when it goes up. So remember that 100,000 RSR here, and the fact that you got 150,000 down here. But let's just say hypothetical, I know, just to kind of explain this. This is on, let's just keep it simple. This is worth $1,000 at the time. I know it's not. Obviously, don't batter me on the content of comments here. It drops in price. You've still got $1,000 in Tether down here, but you've got an extra 150. You got an extra 50,000 tokens to show for it, right? So, for example, down here now, you've actually got 150,000 RSR. Happy days. But what you've actually got here is actually still $1,000 worth of Tether. Nothing's changed at all. But what actually happens on the upward swing is boom. This 150,000 RSR doesn't change. It's still the same because you've still got those assets. But what has actually happened here, an extra 61% has been added to the total. For example, if you're going to go from this region up to this point here, obviously rejection of this retracement, which is quite savage. You've just added an extra $610 to your bag, overall market value. And I always say, do not worry too much about, you know, the world of, say, give or take, we'll call it that. Give or take the world of this USD. Don't worry too much about it. What you want to worry about is mainly this, because the value appreciation over time will go up. But you want to protect yourself as well. So this is a game we're playing. Okay, that's it in basic form. Buy on the lows in the sports when it crosses over and starting to show an uptrend. Ride it until you feel that it's physically rejected, or you're happy to kind of like, well, actually, cool. If it obviously turns around and carries on going higher, you can jump back in because you should already be in profit anyways. There's value appreciation. Now, that's why I say don't worry too much about the US dollars. Worry about the RSR. Because if this goes up to a top point and then it turns around again, well, you know, you're going to make some more money because you're going to make over time, if you still believe in the asset, all kinds of good stuff, those extra units will come vital. So I hope that does make sense. Now, the strategy, how does it work? Now, this is the one that I use. I use certain EMAs. I use the EMA 8 and the EMA 13. The reason being, they're tighter, they're closer, and you can get a good fathom of a trend. Even on RSI here, obviously, you know, we're looking at past data, it's easy. But even if you're going from this run up to this point here, and you start seeing it turn around, you go, oh, it's crossed over. It doesn't matter if you've not hit the tops, does it? It doesn't, because you've made money. Like, even if you're looking at any point down here, it's a monster gain. You're not going to be too pissed off the fact that you've lost a couple of percent. Well, I say a couple, it'll be about, I don't know, 20, 30%, whatever, maybe a lot more. But ultimately, if you've got key levels of structure on there, you'll know where things are. Happy days, you know, you can obviously do a few little things with it. You can keep it in there because the moving average haven't really aggressively crossed over and it's found support level. You can obviously wait, and it turns around, we know that, but wishy-washy, I know. But don't be too bothered the fact that you're going to be, no one buys tops and bottoms unless you're on Twitter and you're seeing people Photoshop stuff. You've got to be measured, and the one thing that changes this dynamic completely is use different EMAs if you want to. It's all personal preference. Ones that I do recommend are obvious. The 50 is a good one, the 100 and the 200 moving averages. You'll see in a minute, I'll put them on the chart. So this strategy is very, very simple. It should be relaxed, it should be chilled, and it should be just portfolio management. Simple as that. It's not trading, it's portfolio management. You want to get the most amount of money for your buck, right? Simple as that. You do not know what's going to happen in 3 years' time. You just don't. If you say put $500 in, you think, right, cool, happy days, and you've managed to accumulate, cool, go for it. You know, it's fine. So what we're going to do, we're going to put 3 moving averages on here just to show you. So I'll delete my ones for now. And the reason why I want to do this is I want to show you something. Personally, I think the best combination for simplicity is having the moving average 20 and the moving average 50. Why do I say that? Is because it is easier to see if we are in an uptrend or a downtrend simply. You will basically buy and hold a position when you are above the moving average 20. As you can see, it forms a trend, happy days, it comes below it, cool. You can maybe want to take profits here, or at the end of the day, you know, if that is the case, look at taking profits and look at buying at a potential support level, or when it goes above it again, boom, back up again, happy days. Simple sort of lines, do it. The reason why the 50 is very, very prominent as well is to show you the overall trend is still in force. Simple as that. Now, it's entirely up to you how you do this. It's obviously very, very wishy-washy in terms of any sort of trend in market, but you can use different ones as well. So you can actually use as well the moving average 10, if you so wish to, and use an EMA crossover the same way as what I did with the 8 and the 13. You can use that EMA crossover to kind of govern to see whether it is an uptrend or a downtrend, and these do react in a certain way to allow you to kind of get a bit of a grasp of the market. It's entirely up to you. But for me, I personally prefer the tighter ones. It looks more neat and tidy. But if you so wish to, you can also use a much bigger version as well, 100. Now, to most people, these hundreds, you know, you can do it very, very simply where you buy at a certain point and you sell at a certain point. As you can see here, buy here, sell here if you so wish to. But for me, I think they're too far apart, makes it a lot harder. But as I say, they are all personal preference. For me, I prefer EMAs. So the way that I would do it, now if you put in moving average and put in exponential, if you put 2 on, look for any sort of strategy that looks good for a trend. Now, some of the best ones in my opinion are the EMAs of the Fibonacci numbers. So the 8, in my opinion, is a really, really good one that I use. And if you want to go a little bit further away, look at the 21. What does that give you? It gives you a real good confluence between an overall trend, and you can kind of relax. Now, you got to remember, each candle here is a day. Okay, so it's not stressy, it's not that random. And as you can see here, I know it's like really, really hard to see in terms of all this, but if you're looking at like an impulse and it pulls up and it's looking quite good, you know it's in an uptrend. Look at the way the EMA 8 is respecting it. But again, this is obviously a support level to look out for in the path of this retracement. It's going to do a correction at some point. But again, the EMAs don't actually cross over. This is what you're looking to trust, this sort of element here. Like, oh my God, but look at the trust here. Again, it's carrying going up, 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 up. Finally crosses over here at a huge gain rate. So for me, it's entirely up to you. You know, anyone's got a different preference in terms of how it works. But for me, I think the Fibonacci numbers using exponential, it's a bit faster. They're really, really good. It's a very similar sort of variation in terms of using the 20 and the 10, for example, or the 20 and the 50 as well. But for me, I think this is a relatively easy one. If you're using TradingView, obviously you can set an alert to tell you when it's actually done the crossover as well. But like I say, if you are riding a big run up, and I know it's all hypothetical and you could get a good massive gain of your investment, it's actually going down where the longer term gains are, because you're gaining those extra tokens and then you've got the money there anyways laying around. You do not know what happens in a trending market. You could be in a position for a good 2 months chilling out until it crosses over and you're like, okay, I'm going to take my profit, sell. If that does happen, happy days, you've got profits anyways. It's a win-win situation. It goes down, you buy more low, and it carries on going down. You don't know how many tokens you're going to get for your buck. You don't know what's going to happen in the future. RSR could be worth $1, $2, $3. You never know. You just don't know what's going to happen. If that's the case and you've gained an extra 50,000 tokens for free, well, guess what? You've made a chunk of money for free without any extra risk and investment. But as I say, 10%, 20%, whatever, you use it and accumulate as much as you can, because that is where you never know what could happen. I've done it before a lot of times in the past using similar sort of strategies. Personally, I do think the ones that I use, the EMA 8 and the 13 is much quicker versus this, for example. But that's just my overall kind of, thing with it. That's just my overall opinion. But for me, overall, as an individual, it's very, very similar, as you can see here. You can kind of see in terms of the world here. Mine's just a little bit tighter. That's all it is, a little bit tighter, so it can kind of get it in. But other than that, that strategy, it does work very, very well. And you just need a bit of patience. Ultimately, levels of resistance and support are always key. Always use those. But if you're looking for confirmations, always wait for an impulse and a pullback to see what it does. But for me, I think overall analysis-wise, we're in a downtrend right now. Overall, we're in a downtrend. I think we are going to come down to this white line at least, and then maybe even lower. And I'm out of position. So if that does happen over time, it could be a nice extra 44% extra in tokens.